California-based First Republic Bank got a $30 billion rescue package from the country's biggest financial institutions. The small bank, which specialized in catering to ultra-wealthy individuals, had many uninsured deposits. Nervous customers began withdrawing money rapidly after two other mid-sized banks failed in recent days.
First Republic is an interesting example of investors, I think, anticipating a problem where none exists. But the very anticipation in the drawdown in their deposit base has put the bank at some degree of risk.
Banking giants J.P. Morgan Chase, Citigroup, Bank of America, and Wells Fargo agreed to deposit $5 billion apiece in First Republic, with other banks supplying smaller amounts. In a joint statement, the big banks said their rescue plans showed their confidence in First Republic and banks of all sizes, which, they added, are critical to the health and functioning of the financial system.
A pretty jovial group.
Treasury Secretary Janet Yellen tried to convince Congress and the public that there is no cause for panic.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them. This week's actions demonstrate our resolute commitment to ensure that our financial system remains strong and that depositors' savings remain safe.
Will the private sector rescue and public sector rhetoric be enough to quell investors' queasiness? Stock market indices closed higher, one sign the strategy may be working. But analysts say there is real fear in the financial sector.
The shareholders are at risk. As was noted, the First Republic shares soared at the news of the rescue, but then they plummeted in after-hours trading. And I think we can see that volatility continuing for a while.
In other words, buckle up. It's going to be a bumpy ride. Rob Reynolds, Al Jazeera, Los Angeles.